Hello, Mark Sturdy here with 7 Days Ahead's multi-asset technical strategies, highlights thereof, week of the 12th of April 2022. Let's just look at our summary. We remain bulls of the dollar. We're really bulls across the board, but with regard to dollar yen, it's come so fast, it's difficult to want to sell the yen at this level. However, there is no sign of it turning back. The most robust and clearly structured trends remain buying the dollar against the euro and buying the dollar against the sterling. We think there's good distance to go there still. Sterling euro is actually sidelined. Let's quickly look at dollar euro as an example of what I'm talking about. We know the market's been turned back. The dollar weakness of 2020 and 21 was turned back by these resistances here. That much is old news. This is old news as well. This is the turn affected by a double top or complex head and shoulders double top. That has driven the market down the back end of 21 and into the beginning of 22. Here we have the market trying to rally and failing to penetrate back through the resistance from these prior lows. And in the detail, we see that actually the rally back up of, in this case, the euro, failing at the resistance here in the daily chart, formed a continuation wedge, a bear rising wedge, which is now broken. That should send the market on down. Again, this is a very well-established and strong bull dollar trend with more to go. Let's look at the stocks. We are interested at levels, but we don't have a strong view on the stocks. So let's look why. The Euro Stoxx 50 is a good example. This is the market that came down smartly, penetrated quite deeply on the initial news of the war, but recovered on the month to not break these supports. It closed back up here about 3,800 and a bit. That's the big picture then. It's a market that fell sharply but found support from these very long-term supports and these prior highs. The bounce, and there has been a good bounce in the early anxious days, has, however, failed at the first decent resistance, which is the horizontals from these prior lows. That's not good news for the bulls and may be the beginning of another bear move down. If we look at the day chart, we'll see the failure again in day terms at these prior lows, and the signal for renewed bearishness might be, for example, for participants, a break of this 37.24 level, that band there. We've held for 4 days. A break of that might signal the next bear move down. Related versions of this are throughout. The one market that it does not look so badly affected and hit is the FTSE. The FTSE market, beginning of the war, fell down and found good support where it had before, 1, 2, 3, 4, perhaps 5 times previously, bounced smartly, is right up at prior highs, possibly through prior highs, that's the June contract, and still above them. So relatively strong FTSE. And this a version of the Euro Stoxx is true for the S&P and the Nikkei 225. Let's look at these bonds. We're bullish across the board. Any doubts we had last week about the sustainability of higher yield trends have been blown out of the water by the reality. Let's look at the the US bond yield chart, head and shoulders reversal, driving the market up. The reversal suggests much higher, up to 3, maybe 3.25 yields, and it's still going strong. Broke through this diagonal resistance, bear trend diagonal resistance. So we've got this pattern driving it, the break of that driving it. Let's look at slightly more detail quickly. This continuation triangle has exhausted itself, but I don't think there's any sense in which this is running out of steam. For example, in the price chart, markets fail to rally back through this level. It's a well-constructed bear trend. This 2095 is now good resistance above the market, suggesting another bear leg. quickly look at the gilts. The gilt market has not only completed its move arising out of this head and shoulders reversal, like the US Treasury note. It has now gone through this prior high, of itself not that significant, but it's always a turning point, the reference point. And look how this is the market ratcheting higher, bouncing off prior highs. And here is the market making a fresh break beneath a prior low in price terms. Commodities. Let's quickly look at our summary. Oil has various levels to look at, but overall we don't have a clear view on it. But gold we do. Let's quickly look at oil. Just go through. This is a slightly unstructured big chart. It's obviously pausing at this 115 to 110 level. There is a bit of an argument that this might be a head and shoulders reversal, driving the market up a lot higher. In any event, the market is having broken far and fast, is now drifting down, won't find significant support until 85 or 6. There's already a suggestion of short-term weakness, possibly with a break of this diagonal from prior highs, consistently rather well established diagonal. A break of this, a close of this on the week would look poor for further sell-off, and indeed a break of 90, 91 would look poor on a sell-off. But overall, the market hasn't got a clear structure. Would steer clear of it. Gold, we are bulls. We're excited by gold. The market has, as we know, long-standing, fiddled around the prior high. Fiddled around the prior high. But in so doing, it has created a big double bottom in the weekly chart. And the double bottom, which completed some weeks ago, 5 or 6 or 7 weeks ago, the market has bounced from shooting up to the prior high to drifting back down, has found support exactly where the double bottom should provide support. And if you look on, this is the June chart, this is the, not the continuation, but the June. Here is the double bottom, here is the support at 1920. And interestingly, for the bulls, so that alone is a good bull indicator. And here we have another. In the day chart, there's another double bottom in the making. A close above 1972 would be another buy signal. Cautious bulls, as I say here, would buy on a close above 1972 on the day. More bold bulls will already be long and be adding to their positions on a close above 1972. Thank you.